Welcome to The Explainer. Today, we're diving deep into Bitcoin. Now, on the surface, its price has been on an absolutely spectacular run. But just beneath that surface, there's this hidden battle brewing, a really high-stakes showdown between the market's seasoned veterans and its newest recruits. So let's break down what's really going on. I mean, look at this. Bitcoin has been on an absolute tear, hitting these kinds of numbers after a monster rally. A price this high just screams a market buzzing with incredible energy and growth. But behind this huge number, the story gets a whole lot more interesting and a lot more complicated. Because while everything looks great from the outside, the on-chain data, what's actually happening on the blockchain itself, tells a very different story. We're seeing this fundamental shift in who's buying and who's selling, and it really suggests the market is standing at a major turning point. All right, so first, let's just take a moment and appreciate the climb. I mean, the numbers look incredibly solid, and they really paint a picture of an asset that has some serious momentum behind it. That year-over-year growth has been absolutely massive. A 71% increase is nothing to sneeze at. But look a little closer at the more recent numbers. The gains have slowed down a lot. The price is kind of stuck in this tight range. And that slowdown, that fading momentum, well, that's our first big clue that something is brewing. And that brings us right to the heart of the issue. This unusual and frankly pretty worrying behavior from Bitcoin's most experienced investors. We're talking about the market veterans. 52,000 Bitcoin. Just let that sink in. Since the price hit its recent peak, that's how much has been sold off by long-term holders. Now, these are the folks who normally ride out any storm. So the big question is, why are they cashing out now? That's a classic market signal that tells us we need to dig a little deeper. This whole process, it actually has a name. It's called distribution. And you can think of it like a baton pass in a relay race. The market's most patient investors, the so-called strong hands, are now passing their Bitcoin over to newer, often more speculative buyers. It's a really critical shift from quietly accumulating wealth to actively cashing it in. And this isn't just some random event. As analyst Axel Adler Jr. points out, we've seen this movie before. This pattern is an exact mirror of what happened back in late 2020, right before the price just exploded in the last major bull run. So history tells us this is what happens right before the real profit-taking starts to ramp up. So what you've got here is a classic market conflict. It's a tale of two very different types of investors, and they have completely opposite goals. On one side, you have the patient veterans, and on the other, the pressured newcomers. So who are these two groups exactly? Well, on one side, you've got the long-term holders, the LTHs. These are wallets that have held onto their Bitcoin for more than 155 days. Think of them as the market's veterans. And on the other side, you've got the short-term holders, or STHs, who've held for less time. They're typically the newcomers, the ones drawn in by all the recent hype. And right now, these two groups are doing the exact opposite thing. The veterans, they're in distribution mode, selling off their coins and locking in those massive profits. Meanwhile, the newcomers, they're watching their own gains shrink practically by the day. And that creates a really tense dynamic. Now, to understand the kind of pressure today's newcomers are feeling, you have to look at past market peaks. In other cycles, new buyers had this massive cushion to fall back on. I mean, we're talking about unrealized profits of over 230% in 2012 and 150% at the 2021 peak. They could easily handle a dip. And today, that cushion is, well, it's pretty much gone. Newcomers are sitting on just 13% of unrealized profit. That's not a cushion, that's a tightrope. This razor-thin margin means they're incredibly sensitive to any price drop and are way more likely to panic sell, which, as you can imagine, could really speed up a downturn. So you've got veterans selling and newcomers getting super nervous. How are the experts making sense of all this? Well, it really breaks down into two main camps. You've got your bulls and you've got your bears. And listen, none of this is happening in a vacuum. We have the Federal Reserve's next interest rate decision looming. A White House report on digital assets is on the horizon. Plus, you've got the fact that August and September are historically pretty weak months for crypto. All these things just add another layer of risk, and it makes already nervous investors even more twitchy. Now, the optimists, like the analyst Rect Capital, they see all this as just a healthy pause. They're pointing to a technical pattern that's called a bullish flag, which is basically when a price consolidates after a huge run-up, almost like it's catching its breath and gathering strength. They believe if Bitcoin can just hold on here, this could be the launch pad for the next major leg up. The bears, on the other hand, they see signs of a potential drop coming first. Analyst Crip Nouveau points to something called a CME gap, down around 114,300. Now, think of it like this weird little blank space that gets left on the price chart that markets, for some reason, have this strange habit of going back down to fill. They think the price might need to dip to that level before it has any real chance of moving higher. So this brings us to the final and most critical question. Where on earth do we go from here? The market is truly standing at a crossroads, with these incredibly strong forces pulling it in completely opposite directions. And it all seems to hinge on this one price level, $118,000. This is the new battleground. The whole game is about whether the new buyers can absorb all the selling that's coming from the veterans. Holding this line is probably going to decide where the market goes next. This really leaves us with two clear paths forward. Path one is hold. The new buyers are strong enough, they soak up all the selling pressure, and they turn this level into a new floor for the next big rally. Path two is fold. The selling pressure from the veterans is just too much, it completely overwhelms the newcomers, and it triggers a sharp correction, what you'd call a classic market shakeout. So it all boils down to this one question. Is this just a strategic pause before the next big move up? Or is this the very beginning of a major shakeout that's going to test absolutely everyone's nerve? The battle between the patient and the pressured is going to decide. Thanks for watching the